Hey guys, welcome back. So today is a small video that's taken from a much larger video which I created for my students. In the bigger video, I go over my full system, my philosophy, my rules, my higher time frame bias, things like that. But today's video, we're just focusing on the entries, okay? So I use DR in my entries. I'm looking for liquidity sweeps with Asia or London. And so today we're going to focus on what I look for, how I take profit, how I manage risk, and the specific confluences that I need to see happen before I enter a trade. Okay, so let's dive in. Okay, so daily range indicator, go to your indicators, write in DR, and then it comes up DR, IDR, V1. Click on that, brings up this. Look at my settings. So you can see the ADR, ODR. So RDR is New York, ADR is Asia, ODR is London. You see the New York is 9:30 to 10:30. That sets the daily range. Then the session ends at 4. But I usually finish my trading at 12. The Asian is 19:30 to 8:30. And that's your daily range. And then that ends at 2. So you're looking for a broker model after 2 o'clock. Then you have your London, which is 3 to 4. We start trading at 3, which is the start of the London DR. And then that runs till 8:30. And after 8:30, you can take premium trades. So these are all the daily range times right here. Down here, I have show middle IDR line. I don't have the DR line, it's the IDR, because the IDR, that's where we get our broken model data. I have the midline blue. I have a bit of a border around my box. I have opening line. I have box. I have, yeah, that's it. So if the box is green, it basically just means that you're looking, it's favoring along because the close price is closed higher than your open price of the box. So we draw this out. Okay, so step one was, just so we're aware, we can mark off, say, 3 o'clock. So this would be where we can start trading. And then we have 8:30. This is where we can start trading premium. But today, we literally don't have any fair value gaps in the discount zone, so we don't even really need to do that today. If Asia is false, we would start trading at 4:30. Right, so I'll show you what I mean by false. So we have the range, it begins. Okay, so firstly, you see the daily range, again, is your highest wick close and your lowest wick close. That's the daily range. Your implied daily range is the highest body close and lowest body close. We consider a session true if it closes below the daily range low or high, and then it doesn't close above the opposite side. So right now, this is a true Asian session. Let's have a look. Let's go to the end. Okay, that's the end. So it's a true session. So this 4:30 basically means nothing for us. Okay, so step 4, if model break, mark off current session high and low and wait for manipulation for our direction. Okay? And we want to, so this blue line here is the model. I just want to make it a little more stronger so you guys can see it. So this is when we start trading. We want to see this broken, and if this is broken, we're expecting both sides to be taken. Comes up. Okay, so we officially can start trading. This is the box of DR beginning to form. Okay, broken model. So instantly, because we have a short bias, I'll just mark this up. We're expecting this to be taken, and here we have the Asian high. Okay. So if we've broken it and we're above. Okay. So I'll get rid of this now. So this means, okay, the Asian high is taken. This is what we want to see. What we're expecting is we're expecting this low to be taken sometime during the session. To step 5, Wait for 2-minute or 5-minute fair value gap to appear. Enter. Stops underneath lows or highs, or above highs or lows. If over 30 ticks, under first candle of FVG move. So do I have my fair value gaps turned on? I do. Okay. So what we want to see now is we want to see a fair value gap open up on the 5-minute, and when it does, we want to short with our stops above the highs and short to the Asian low. Ideally, we want to see price come to an area where it makes sense. I mean, sometimes you don't. It can just sometimes reverse in the middle of nowhere, and I will take those trades. But if I see it reverse at a really important level and I've already taken a bullet, then that could be good too. So it could reverse here, it could reverse here, it could reverse up here. Okay, so I'm just curious to see where. So we're looking for that 5-minute fair value gap to open up. So look. Okay, so first things first, we have a confirmation long on London, but as the rule said, we can short against the London confirmation because the probabilities aren't as low to take the opposite side in London as it is in New York. So we can take it, and also we can hold a trade longer than London. So even if it stays true, we're expecting a drop after that anyway. Okay, see no fair value gap created. Okay, see, we have a fair value gap. This is a 4-hour fair value gap here, this massive box. Ooh, let's have a look here. Let's have a look here. Does it? No, takes it straight away, so we don't bother with that. See how price responds to fair value gaps. I did not trade fair value gaps at all. I mean, I knew about them, but in DR, we were kind of told that they didn't really exist. And then when I started doing my backtesting, I'm like, man, you're crazy. Oh, okay, all right. What do we see? Fair value gap opened up. Comes here. I mean, it's not the greatest setup, right? It's not the greatest setup because it's such a tiny fair value gap, and it's not real. Like, I want to see a kind of like this kind of move, but we have to take it mechanically. And we're looking more mechanically here. So, I mean, 6R. Yeah, I would be in this trade anyway. There is, okay. And we're out. Okay, that's fine. We've lost. We've lost. Okay, it's a loss. Okay. So again, I'm very transparent in this channel. I want to just show you losses because, again, if you have a 50% win rate, half of them are going to be losses, man. So you've got to show the truth. All right, so, you know, let's see. I'll only want to, if we get up to here and I see some real weakness, there's a ton of fair value gaps here. It's the middle of the 4-hour fair value gap as well. So let's see. If we see another 5-minute fair value gap open up, we'll take it. Okay. Okay, so again, we've got another fair value gap created. Okay, so we've got the three candle play. You want to have the 3 candle play. So what do we do? What do we do? Come here. Stops above here. And target the lows. And what I like about this too, we have a lot of fair value gaps here. Okay, ooh, all right. Good, good. So obviously you'd be break even at least here. Okay, all right. So what could you do? I mean, so you could take your 10R, or you could say, okay, I'll put my stop, say here, and I'll trail it to here, okay? Because this takes us to step 6. Trail after opposite side hit can either full TP, go BE, or limit order 5 ticks under or above. Next target is 0.5 daily or new daily high low 2-hour minimum targets. So we've already gone through the 0.5 here, right? We've already ripped right through it. This is the lows. So technically your first target could have been here. Then your next target is the low. 1, 2, 3, 4. So it's 5 ticks. Just give or take, it's there. So you could go for the full 17 if you wanted. Now you would have taken that. It would have been stopped out there. Okay. Let's just see what the rest of the day does, because we want to see. I want to explain what happens. Okay. So we're out. Right. We're up for 10R. So 9R for the day. Asian high and low have been taken. So this is still potentially could be hit. No. Okay, so this is New York box starting to form. What's interesting here is that this is the London midpoint. Okay, so the London midpoint is broken. Okay, it's wicked through. So that means your draw, you're expecting potentially another swoop up here and then a dump. Okay, like this. Basically, choppy day. But it's not closing, so it's not a really big probability. Generally, you want to see that close. So this, but you can just see how important that mid range is, right? Really important. Let's see, New York. So the box, it's red, which means close is lower than the open. So we actually are expecting lower prices here. Generally, with these boxes, the New York range tends to respect these colors a lot more. So when you see that red box, you are kind of expecting price to go up. So look here, green box, up we go, red box. We should probably confirm short here. Oh, there you go. Imagine if you just held it. I mean, that's a 17-hour trade. But, you got to take your money, because this could, with a broken model, because technically it is broken, price could have just done this. Imagine if it did all that and just stopped you out, and then went all the way back down. Wouldn't want that, would you? Okay, that's it. That's the day. Okay, guys, thanks for watching. It was a pretty good trade. So we did lose one, but then we won one. So I want to be 100% transparent on this channel. Sometimes trades do lose. This is not financial advice. Sometimes you can get 80% win rates, 20% win rates. The average for this is about 50%. So we lost one, but then we hit a banger right afterwards using this system. Okay, so thanks for watching, guys, and I'll see you next time.